Korean government raises taxes to 45% on the country's highest income earners. New tax breaks, though, for small business, consumers, and investors. There'll also be a new tax on gains made from cryptocurrencies. South Korea is going to allow small gatherings at churches again now that cases of COVID-19 are low enough. There were 63 new cases reported Wednesday, most of them imported. And with dozens of potential vaccines in development around the world, governments are signing contracts to have them produced. But there's concern that even with hundreds of millions of doses, there won't be enough for some developing countries for a while. It's 5 p.m. here in Seoul. Thank you for tuning in to Arirang News. I'm Devin Whiting. South Korea reported 63 new cases of COVID-19 on Wednesday due to cluster infections in the capital and a continued rise in imported cases. Of the new cases, 29 were transmitted locally, 16 in Seoul, 8 in Gyeonggi-do province, and 4 in Incheon. 34 were imported. Total cases now 13,879. There was one additional death, raising the death toll to 297. Meanwhile, with the number of cases linked to churches coming down, the government is set to lift its ban on small church gatherings as of 6 p.m. this Friday. However, local governments will still be able to restrict them if need be. There has been progress in the search for a coronavirus vaccine, promising results in several countries, but there are also concerns that even with hundreds of millions of doses, there won't be enough for some developing countries. South Korea is looking at what can be done to make sure that doesn't happen. Choi Jung-yoon reports.
Will we have a COVID-19 vaccine before the end of this year? According to the World Health Organization, there are 23 potential vaccines undergoing human trials, with 3 of them at the large-scale late stage and reported to have generated immune responses and be safe to use. As it's uncertain which vaccines will be successful, many countries are embarking on a strategy akin to spread betting, while aggressively committing to future vaccine doses even before development. Washington has closed a deal with AstraZeneca for enough vaccines for 300 million people. The UK government has also secured some 230 million doses so far and signed deals for a further 90 million. However, only a handful of nations can afford to commit major sums of money to such speculative investments, which could mean developing countries are forced to the back of the queue. Amid mounting concerns over vaccine nationalism harming the global fight against the coronavirus, voices have been calling for global efforts to equally distribute vaccines for public health purposes. South Korea on Wednesday implied such actions are underway and that it's reviewing participating in the plan. The health authorities said discussions for co-developing a COVID-19 vaccine as well as setting orders for fair distributions are ongoing at an international level, in close cooperation with the WHO and Gavi, the Vaccine Alliance.
If such work is to proceed, South Korea is expected to give its financial and other support to the international community's vaccine co-development, which will give us a say in vaccine distribution in the future.
Seoul is also seeking other ways to secure vaccines. South Korea's SK Bioscience has agreed to produce AstraZeneca's vaccine at its own factory in Gyeongsangbuk-do province to help boost production capacity as well as secure a domestic supply for Korea. However, no specific details regarding domestic supplies or the price of the vaccine have yet been revealed. Choi Jung-yoon, Arirang News.
To pay for its ambitious plans for the economy, the South Korean government has announced a bill that'll raise taxes on the country's highest income earners. The bill includes measures to bring down soaring home prices in the capital area by discouraging speculation. Kim Da-mi has the details.
Higher taxes for the ultra-rich. That's the crux of South Korea's latest revision to the tax rules published on Wednesday, with the goal of strengthening social solidarity and income distribution.
As all of our citizens can feel, small business owners and SMEs, as well as those on lower incomes, are struggling due to the COVID-19 pandemic. The government has decided to raise taxes on those who are capable of paying more and have taken less of a blow from the pandemic than others.
That means that people who earn more than 1 billion Korean won a year, which is around 835,000 US dollars, will have to pay 45% of it in tax. So, someone who just crosses that threshold will owe taxes worth around $375,000. The government noted that this new rate will apply to around 0.05% of the country's population. That'll bring in revenues of about $754 million. Globally, a tax rate of 45% is not uncommon. It exists in Japan, France, Germany, the UK, and many others. Also, in the bill announced on Wednesday, it's going to be a lot more difficult for speculators to make money buying and selling homes. If a home is sold within 1 year of purchase, the gain will be taxed at 70%, up from the current 40%. Gains made within 2 years of purchase will be taxed at 60%. The government is also jacking up property taxes on people who own multiple homes. It's going up from 3.2% of a home's value to 6%. If passed by the National Assembly, these tax rules will apply next year. The government said it's going to send the bill to the Assembly by September. 김다미, Arirang News.
The changes to the tax code not only raise revenue for new spending projects to revive the economy, they also include tax relief for businesses, ordinary consumers, and investors. Ji-young explains.
The South Korean government is using its tax reforms to help the economy overcome the damage caused by the COVID-19 pandemic.
Above all, we've tried to make groundbreaking changes to the tax code so that citizens and companies can recover from the impact of the outbreak.
These changes include corporate tax relief based on investments. More types of investments will be eligible for tax exemptions, and tax incentives will increase in line with investments. Tax relief will be higher for investments included in South Korea's digital and Green New Deal projects and new growth industries. As part of its effort to boost consumption, tax relief for credit card spending has been increased. The amount of spending that is eligible for tax relief will be raised by about $250 for all income brackets until 2020. On top of that, the revision also aims to extend payroll tax incentives for small to medium-sized companies. For every temporary worker who is switched to a permanent position, the company will get up to $8,300 of tax deductions. The government's tax changes also aim to revitalize the stock market and support retail investors who have propped up the stock market during the outbreak. Stock transaction tax will be lowered gradually from the current 0.25% to 0.15% by 2023. This will help ease the burden on investors as they have to pay the transaction tax even if they make a loss on their stock investments. And from 2023, the capital gains tax on stocks will only apply to those whose income from investment is more than $41,000 a year. This has been revised upwards from the previously planned $16,000 to minimize the damage of the tax revisions on the stock market. Ji-young, Arirang News.
And starting next year, South Korea is also going to tax gains made from trading cryptocurrencies like Bitcoin at a rate of 20%. The Finance Ministry explained that other countries like the U.S. have already been taxing crypto, viewing those as in a similar way to securities like stocks. Cryptocurrency incomes will have to be reported every May. The rule takes effect from October next year, so reporting will start in 2022. This will only apply to gains worth more than 2.5 million won per year, or about $2,000. The rule will affect people living in other countries as well if they use cryptocurrency exchanges based in Korea, because the exchanges will be responsible for deducting taxes from those gains. Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Yang Jun-seok, Professor of Economics at the Catholic University of Korea. Professor Yang, thank you for coming on today.
Happy to be here.
Well, stocks on Wall Street were up overnight for the most part, with the exception of the Nasdaq. A lot of news there, earnings coming out, also the EU agreeing to a stimulus package. Some big swings in Korean shares today, though. What's the story in the markets?
Okay, well, the U.S. markets have been, even with the earnings reports, rather mixed and perhaps a bit lackluster this week. All the exchanges have slightly different results. Dow, after falling at the end of last week, it rose this week. S&P, it continued to rise from last week, but NASDAQ, as you just mentioned, after rising substantially on Monday, it fell slightly yesterday. Now, potentially the big news is, as you mentioned, in the European Union. They passed a new fiscal stimulus policy, but because of the way that this policy is structured, it may go beyond just plain economic policy. A lot of analysts are calling this so-called Hamiltonian moment after first U.S. Treasury Secretary Alexander Hamilton. Why this is so interesting is that, well, the European Union has a single monetary policy carried out by the European Central Bank, but the fiscal policy were all run by individual governments, so there had been a lot of coordination problems, but also it managed to sort of buffer problems in one country from problems in other countries. But with this particular stimulus package, they are forming a coordinated policy where all the members are acting together, and the way that they're financing this debt from this policy is to issue it in the name of the entire European Union rather than just one country. Now, this is a similar method that the Alexander Hamilton used in 1780s to unify the 13 individual colonies in the America into a single United States of America, not just economically, but also politically, because now all the 13 colonies had common economic issues that they need to talk about, because the debt policies had tied the all 13 colonies together. And a lot of people are seeing this as perhaps a beginning of such coordinated European system where all members of European Union are going to work together on fiscal policy as well as monetary policy. But given such potential for this market, the stock markets don't seem to be taking a lot of this in consideration. The Euro 50 did rise strongly last week and this week, but FTSE, perhaps because the United Kingdom is going to go out of the European Union, had not much change this week. The Asian markets also mixed. Nikkei, it fell today. Shanghai, it continues to rise from last week. Hong Kong, slight fall today. Kospi and Kosdaq. Well, Kospi had been a roller coaster this week and last week and this week, but as you mentioned, it did fall a little bit today, but after a relatively large rise yesterday. Kosdaq, it had a small fall on Monday, but relatively large rises on Tuesday and today. So overall, Korean markets are doing well. Global markets, they seem to be in sort of a holding pattern, just going up and down, maybe on a slightly upward trend, but still no real clear trend that we can see.
Well, fascinating discussion there, Professor. But here in Korea, we've had this problem of concentrations of wealth and population in the capital area in several decades now, and the resulting inequality is becoming especially severe now. What's your take on the situation, and what can be done about it?
Okay, well, Korea is sort of an outlier, but it is following a global pattern. If you look at other countries, major metropolitan areas are growing while the smaller cities are shrinking. That's in Europe as well as the United States. But a lot of the theory that goes behind these type of urban development sees these type of changes as being inevitable. And that's because not only does larger cities have better infrastructure, roads, education, and medicine, but some of the newer industries do seem to have some kind of economies of scope or a synergy effect. For example, if you have a strong financial sector, then you not only have a strong financial sector, but also a strong computer sector, a strong legal sector, and there's a lot of switching of people working in those sectors, working in different companies in those sectors. So it may be that because of this economies of scope, economies of scale, larger cities are bound to get larger. That means Korean a geographically balanced growth plan, which started with the Nomuyan administration, may need to change. The idea behind it was perhaps create a lot of little holes in other areas, but if you try to set up little holes elsewhere, you may not see that much of a synergy effect. The other type of cities, the innovation cities, the idea is take one industry or one set of industries, have it develop in a certain city. But again, if you have any kind of synergy effect and you take just one industry, it may not be realized. We may have to drastically think about how to proportion growth in different areas, see what certain area is good at and try to keep that strength, try to play to that strength rather than just try to replicate a lot of souls everywhere.
Well, Professor, we're almost out of time, but we've been seeing households here in Korea and businesses buying up large amounts of dollars. What's behind this demand for foreign currency?
Okay, well, it basically because the global economic financial market seems to be very nervous right now. Whenever the markets are nervous, people tend to move into safe assets, safe currencies that's mostly in dollars. We've seen this in 2008, even though the crisis then came from the United States, people still wanted dollars because it was the safest asset. And even though right now the coronavirus, one of the big centers is the United States, the same type of logic seems to be applying. So at the beginning, people wanted to keep dollars because it was a safe asset. But then because of that, Korean won depreciated, the U.S. dollar appreciated in value. So since we do not see the end of coronavirus coming anytime soon, I think people are betting that the Korean won will keep depreciating or stay at weak levels. So that's why they're moving into dollars.
All right, Professor, thank you so much for sharing your insights today. We always appreciate it.
Thank you.
And that does it for this newscast. Thank you for watching.